You are tuning into the Lehigh Low Ego, High Impact Mindset podcast. I'm your host, Volkan Emre, along with a dynamic team of Kellogg School of Management alums. We are here on a shared mission to uncover the mindset that drives impact and success. On Lehigh, we have thought-provoking conversations with incredibly successful entrepreneurs, business leaders, and investors from around the globe. We uncover the mindset that drives them, allowing them to make a high impact without losing themselves to ego. Now, let's get started with today's episode. Today, we are with a prominent VC investor, Enis Hulli. Enis is a general partner at 500 Emerging Europe, a VC firm focused on investing in Central Eastern European and Turkish entrepreneurs on pre-seed and seed. Enis has assisted various tech unicorns, guiding them from their seed stage to their IPOs. Enis is a native of Istanbul. He holds an engineering degree from McGill University in Canada, and he is currently based in London. We are recording this podcast remotely via Zoom. Enis, thank you very much for joining the Lehigh Mindset podcast. It's a pleasure to host you.
Thanks for having me. This is great.
Enis, you may know that we have some warm-up questions to get to know you a little bit better. I will be asking you some rapid-fire questions to get us all warmed up. Are you ready?
Yes, fun stuff. Let's do it.
Coffee or tea?
Coffee until 2 p.m. And then you drink tea if you have to.
Okay. Dogs or cats?
Cats, for sure cats.
Yes.
I used to be a dog person until I made a cat friend, and then I converted to a cat person immediately.
I'm really so happy to hear that as a cat person. So that's great. Mountains or beaches?
Beaches. Who wants mountains? I mean, you only go to mountains if you have to. If there's a beach close to you, go to the beach.
Okay. Yeah, why not? Text or call?
Voice notes, which is a combination of both, but I'm a really pro voice notes person.
Very interesting. Wow. Okay. So I take a note here, and next time when I want to reach out to you, so I will send you a voice note. So, okay.
I listen or send voice notes wherever, whenever. Like I'm in the bathroom minding my own business. I'm either listening to voice notes or I'm sending voice notes.
Wow. Okay. That's really a great answer. Thank you. An interesting one. Music or podcast?
Podcast while you're hustling. Music, Dolce Vita, you know?
Okay. Yeah. Depends on the mood. PC or Mac?
Same answer. PC if you're hustling, Mac if you're Dolce Vita. So I was a PC person, then I converted to Dolce Vita, so I'm a Mac person these days.
Okay. What's worse, dishes or laundry?
Laundry. I love the dishes. Dishes is like meditating. It's therapy. I love doing the dishes.
Wow.
What I hate the most is cooking. I hate cooking. I hate when someone cooks around me, even.
Okay.
Second is laundry. Dishes are great. I can do dishes all day.
But I suspect you enjoy eating them, right?
I love eating.
Okay.
I love eating. I just don't like preparing.
Okay. What's the first app you open up in the morning?
WhatsApp.
Oh, okay.
Given my tendency towards immediate messages, voice notes, etc., I wake up in the morning, I have 200 WhatsApp messages, and I don't have a good day unless I clear them in the morning.
200? Wow, that's unbelievable.
We have a group with all of our portfolio companies. We have 65 portfolio companies, so there are 65 portfolio company groups alone. Oh my God.
So,
there's stuff happening all the time.
That's a lot, really a lot. Wow. Okay. So thank you for the warm-up questions. Could you tell us a little bit about your background and how you came to work with 500?
Of course. I studied in Montreal. The reason why I'm starting with that is I was super bored. It was negative 20 degrees, Canada. For 6 months, it's full of snow. I have nothing to do. So first year was partying. Second year was football manager. And my tendency towards football in general and Premier League. Third year onwards, it became startups. So I started a company while I was in the third grade in college. Didn't end up doing that well. Finished college, moved back to Turkey, joined Rocket Internet, which is a German company that also IPO'd back then. They had a venture in Turkey. That ended up not doing that well either. I didn't know what to do with my life, so I turned into mechanical engineering because I studied civil engineering.
Mm-hmm.
My family has an air conditioning business, so I was like, yeah, I might as well do heating, ventilation, air conditioning, the installation of these more mechanical infrastructures within a building. That's how I made some money. And then to go back to the startup scene, I think I was too coward to become a founder myself. Didn't have the courage. So I became an angel investor and did a couple investments in 2015. That's how I met with 500 back then. And 500 Startups, which is what it was called back then, had this idea of global expansion through finding GPs, general partners, potential fund managers in different locations around the world, and enable them to do to raise their first funds. It gives you the brand, the infrastructure, the legal framework to set up your fund. And as a first-time fund manager, I was 25 back then. It gives you a lot of tools that you can play with, which is how we made. I mean, I joined under the umbrella into 500, and we set up the first fund back in 2016, a $10 million vehicle that targets Turkish entrepreneurs, either based in Turkey or in the US, but targeting the US market from the get-go.
And there are a lot of takeaways from this answer. Let me tell you one thing first. HVAC is such a sexy topic right now in the private equity space in the US. So if you want to go back to HVAC, like one day, you can really make a lot of money.
I love it, man. There's so much money to be made because there's all these intricacies as to how you design a system and then the different tools or hardware that you can use, which enables you to have much better margins than any other piece in construction. I mean, if you're doing concrete, if you're doing electrical, I don't think you can make as good margins as you can in heating, ventilation, and air conditioning.
Yeah, and the recurring revenue component also is there. So it's actually a great business. But going back to the creation of the first fund, the $10 million fund, and as a 25-year-old person, you have $10 million to invest in Turkey, or in Turkey or like Turkish entrepreneurs abroad. And I think back then it was like an untested territory, right? And it also meant possibly land of opportunities. How did you navigate like in that untested, untapped territory? How did you basically identify the investable startups? How was that experience for you, especially in navigating in such an ambiguous, how can I say, territory?
So the thesis behind the fund is the Turkish venture scene was just up and coming. There were a couple local funds. There were a couple global funds that did investments in Turkey. But a lot of the success stories were local companies. It would be local food delivery, local e-commerce, local payments, etc. Our thesis was different. While we started the fund, we believed that in the Middle East, in Latin America, in Africa, in Southeast Asia, you have these regional unicorns. A company starts in Dubai, expands to Saudi Arabia and Egypt, can become a unicorn because there's 1 billion people there. Or a company can start in Singapore, then expand to Indonesia and Malaysia, become a unicorn in Southeast Asia. Same goes for Africa, same goes for LATAM. Turkey is different. Eastern Europe is also different. There is no expansion potential. You cannot, or there hasn't been any case where a startup would start in Turkey, dominate the local market, and then expand to adjacent markets, whether it's Greece, Bulgaria, Romania, you name it, and then, became a unicorn. That just doesn't exist. There are multiple reasons why it doesn't. It can be either because the markets are not big enough, cultural barriers, language barriers, economies not being that big, or the region in and of itself not being a region from a fluidity perspective, which then pushed us to this outcome that we don't want to do local investments. We don't think there are enough verticals that are venturable. There's nothing as a regional play in the region that we're in. And the only thing that can be done, and you can call this the Israeli model, you can call this the Estonian model, is that companies who would target more mature technology markets, either Western Europe, US, or the UK, from the get-go to build products that would be more tailored towards those markets. And Israel has been prolific in creating unicorns, but we realized that both Turkey and then in Baltics and Eastern Europe as well, there are 20 countries who are aspiring to become Israelis. They're not trying to find the next regional unicorns. That's not the case. They're trying to find the next global unicorn, which is going to have its technology office back at home, whether that's Turkey, Romania, or Estonia. So we mimicked that Israeli model, employed that into Turkey with Fund One, saw that it worked out, and then now we're trying to mirror that in Eastern Europe and Baltics as well.
I think basically I have to believe that this mindset, this starting point probably made you also very selective in terms of the industries, right? So which industry to select for investment was probably a key driver like for your decision making. So can you elaborate more on that? Like which industries like were in your focus area when you first started?
A lot of the VC funds, if they're doing country-specific or regional investments, they would try to target the top 1% of entrepreneurs in that region, for example. Ours was different. We were trying to find the top 1% entrepreneurs globally who are, for some reason, based in this region, so that the Turkish entrepreneur that we can back in Istanbul can hopefully go and compete with a US company or an American founder in the US, So that whole flips the narrative as to the type of founders that we're looking for, makes it even more narrow, more limited, but also hard to reach, because those people, if they're 1%, top 1%, top 0.1% in some cases, globally, then that means that there's going to be deal competition when you try to invest in these companies. From a deal flow perspective, back in 2015-16, I would say that 70% of our deal flow was companies that were only focused on Turkey, and only 30% had more global ambitions. And out of that 30%, it was really easy to identify which ones of those entrepreneurs at least had a shot to build global companies, whereas which ones wouldn't even have a shot to build one. So I think identification-wise, picking-wise, it was easy. What was tougher was the access part of things, because if you can identify that these people can build global unicorns or success stories by employing talent back at home and then building companies in the US, that means a lot of different funds can also identify them, and you go head-to-head in deal competition. In terms of markets that we invest in, we believe that what's better about employing talent in Turkey or in Romania? What's better is that you have a higher talent retention, you have better talent access, and obviously the cost of talent is also a bit cheaper. But cost of talent is cheaper all around the world. I mean, if you compare US to the other 200 countries out there, whether that's Bangladesh, Pakistan, or Nigeria, obviously talent is cheaper. What was different is that this cheaper talent has the cultural adaptability and English skills and product building skills to build global or US-centered products, which is not the case in all these other emerging markets, because the talent there would mostly surface either the local ecosystem or the regional ecosystem, but not build global products. So what we said was we have to target more blue ocean markets, because for us to compete with a US founder who's based in the US, that founder needs to have the right team, the right product, and right timing. They can't be too early to the market, because if they're 3 years too early to the market and wait until the market matures, that would take millions of dollars. Whereas for our founders to be a bit too early to the market and then wait until the market matures is doable just from a cost standpoint. So we had to target more blue ocean markets as opposed to red ocean ones. We have to take a lot of market risks. These markets might never come about. You never know. And lastly, we had to take some timing risk and make sure that we are just a bit off in terms of timing. And if we wait 1 to 3 years, hopefully our companies are going to be best positioned. Today or last year, that was AI. Back in like 7-8 years ago, we did a lot of deals in health tech, for example. We thought the market was just maturing, but all in all, what we try to do is we try to select founders who are trying to be a bit too early to the market.
So there is, in your answer, there's such a strong emphasis on founders. Like it sounds like in your search, founders like drive the most of the selection process, I believe, right? And how do you then identify these founders? Like, what is the process, and what makes 500 what sets 500 apart from other firms in identifying these founders?
Just from a character standpoint, obviously, we're looking for founders who have very strong problem definitions, who are very ambitious in the problems that they're targeting. Since this is pre-seed idea stage, we don't care that much about the solution definition, because they can pivot the market, the segment, the go-to-market, the monetization, the solution definition, the product, etc. But they have to be anchoring themselves to that problem definition. And to anchor yourself to that problem definition, you have to have deep domain expertise so that it's a unique problem definition. And you, as the founder, you are uniquely positioned to be able to find that solution to that very specific problem, which would potentially position you as a founder in top couple thousand in the world in know-how around that space. Apart from this aspect around domain expertise, it's also a founder's character that we try to judge. As you pointed out correctly, I would say 95% of our decision making is really founder-led. Founder is the only thing that can get us from 0 to 1. And then we look at all these other things like competitive dynamics, business model, go-to-market, blah, blah, blah. That can get us back from 1 to 0. But founder is the only reason we invest. And we try to look for reasons that would push us potentially not to invest, is our whole decision making. How we find them, it's a very multifaceted approach, but we have this data-driven stack where we crawl LinkedIn all the time, and we try to look for different Turkish names, Romanian names, Polish names, etc. We have a list of 10,000 names, and we try, every day we get alerts in terms of who is becoming a founder globally. That's one part of the stack. The second part of the stack is we also crawl GitHub, and every day we look at every single trending. Our script looks at in 11 different languages, all of the trending repos, which is why we did all of open source investments, by the way. The script would look at all the trending repos, all the contributors, search for Eastern European or Turkish names. And if there's a trending repo that's coming up from the Baltics, Eastern Europe, or Turkey, obviously we will try and go and speak with the developers that are developing it. We do a lot of events. Every month we do a couple events all around the region so that potential founders will also come and join these events, because one of them is called Founder Shuffle, where we only have potential founders meet each other so that they can they can form the initial co-founding team. We have a scout network of 15 scouts where we did deal by deal carry agreements so that they would send us the deals. And now we have a group of 20 entrepreneurs who invested into our fund, because good entrepreneurs know about other good entrepreneurs. Getting these entrepreneurs incentivized inherently by investing into your fund means that once they hear about good deals that are happening, they would let you know. So it's very multifaceted. We have 6, 7 different things we do at the same time. The biggest moat that develops over time is the firm's brand and your personal brand, but that takes time. That's a snowball effect. Apart from that, it would be more things like the data-driven stack that I just told you about.
It seems that you are really very busy. You just talked about only the search phase, and then you identify potential founders and ventures to invest in. I think there's then probably a due diligence process. And after that, if there's an investment that can be materialized, then you enter a different phase, right? And you also add this up. You just told me that you, on average, you get 200 WhatsApp messages per day. And then the second part of
way more than that. I get 200 messages during night. Like I wake up to 200 messages. And then throughout the day, WhatsApp is my main CRM. I don't use my mobile phone on WhatsApp. It's always my PC because of my Mac, because it's much more efficient. But yeah, I mean, I don't know if it's good or bad, but WhatsApp became my main interface of communication.
I have 2 questions that are related to mindset. One of them is the mindset of entrepreneurs, and the other one is going to be more personal. It's going to be your mindset and how it actually has evolved over the past 10 years in your current role. So let me start with the mindset of the entrepreneurs. How do you think the mindset of successful entrepreneurs differs from that of the average person? Are there any specific traits or characteristics that you believe are essential for entrepreneurial success?
Yeah, I mean, I think success breeds success, and that's the case either with a founder or someone who's looking to become a founder. So we look for career momentum before we invest into a founder. And if it's a first-time founder, we try to see what that person did for college, after college, first experience, second experience, and you have to see that hockey stick momentum in their career, which kind of signals that that's going to continue when they start building a business as well. So where you start from, your base matters, but what matters more is the momentum that comes after that base, irrelevant of where you've started. We also look for founders who are inherently driven. There can be different types of drives. People can be driven for different things, but the one that's most concerning would be around money. because that goes. The moment you become a Series B level company, your money concerns are potentially gone as a founder. And if that kills your drive, that potentially caps the upside potential of a deal. So we look for founders who are actually inherently driven for whatever reason they have psychologically behind their mind. It might not be the most healthy way of doing things for them. They might need therapy, but I think for business to have tremendous success in a 5 to 7 year period, I mean, if you're trying to build a billion dollar business in 5 to 7 years, it's not gonna happen by having a healthy ordinary lifestyle. I don't think we should expect extraordinary results from ordinary people. So to get extraordinary results, we're looking for extraordinary people, both from a skill sets perspective, but also from a mindset and psychological perspective, good and bad.
Allow me to add one more sub bullet point back to the mindset question for entrepreneurs. How about the characteristics of successful Turkish entrepreneurs in your view? Is it possible to briefly classify the general mindsets and characteristics of Turkish entrepreneurs, successful Turkish entrepreneurs who could finish the journey from A to Z?
I wouldn't want to put them in one bucket because there are different ways of drives and there are different ways people would show that they're driven. I mean, obviously, you would have founders who are much more who can steer the wheel much more aggressively while hurting the people or their partners or their customers or whoever is around them, and they might go to success. At the same time, you have more grounded style entrepreneurs who do more calculated decisions but have a higher probability of that those decisions being successful. I think both works as long as there are probably 4 or 5 different patterns of characters that eventually work out. And I wouldn't put them into one bucket alone, to be honest with you. What I wouldn't compromise on is passion, drive, like the things around those keywords I think are vital, and then the core reason for them. So what we do is while we're investing into a company or while we're investing into a founder, actually, it's not even a company. One of the biggest question marks is what inherently drives them, and we try to get an answer to that. It's very tough. I mean, it's very psychological. Sometimes it's the way they've grown up. Sometimes it's their parents. Sometimes it's the society that they've grew up in. Sometimes it's someone in their head that actually doesn't even exist, but they're trying to prove themselves to that person that doesn't even exist. We try to go deep into that, and I think that matters a lot, because otherwise, if it's only a concern of money, capital, or being able to have enough resources so that you would have a good lifestyles, I think that bar is not that high to build a billion dollar business. It's a lower bar, and those founders tend to become very risk averse once they've hit that bar.
So, Istanbul, I will definitely come back to you and your mindset. I have one more spontaneous question on what actually makes Turkey like different and Turkish entrepreneurs like different. Istanbul is the city that has a track record of being the largest city on earth for the longest time period. It's literally where East meets West. And like we live right now at the era of entrepreneurship. And you have been one of the very important VC players in that city. And how about Istanbul? What are the advantages and disadvantages of being based in Istanbul? And I have to believe that most of your investments, like in Turkey, probably they are based in Istanbul, right? The companies, like probably most of them are in Istanbul, I have to believe. Am I correct?
Yeah, I mean, I would say yes. I would say that more than half are in Istanbul. There is quite a lot of entrepreneurial scene in Ankara as well. I'd say 1/3 out of our portfolio companies that are based in Turkey, because a lot of them are also not, but 1/3 of them would be in Ankara, 2/3 would be Istanbul.
2/3. Okay. So these are probably all based in this technology R&D centers at university campuses, I believe, like major university campuses, right? So do you have like any words like to share about Istanbul and its impact on entrepreneurs, like in general? Because it's a very tough city to live in. I think I believe that if you solve a problem in Istanbul, and if you have a proof of concept in Istanbul, you can then potentially scale it up like to a global like level for some use cases, right? Not for everything. What are your talks about like that city, and what's the importance of Istanbul for your story, and the story of 500?
I think talent network effect is real. So network effect, which is the strongest in the Bay Area. I mean, good talented people want to be with other good talented people. That happens on a company level, that happens on a city level, that happens on a country level. For Turkey, that is the case in Istanbul. If you're talented, irrelevant of where you were born in or where you've raised in, except for Ankara, you would want to come to Istanbul. So I feel like the talent flow, apart from Ankara, is all towards Istanbul right now in Turkey. And if you're looking to scale your talent operations in Istanbul, because you have better access to talent and then you can retain that talent on a longer time horizon, and obviously that talent is also cheaper, you build your tech team in Istanbul. What's critical for our companies that are targeting the US market, employing talent back in Istanbul, is that they can actually scale and have 500 developers working on the same product for multiple years, which is never the case in more competitive talent markets. So that's the importance of Istanbul. But if you're trying to look for 10x developers, if you're trying to hire the best of the best, then I wouldn't look for Istanbul, to be honest with you. Mm-hmm. But a lot of our companies, obviously, they do look for 10x developers, but at the same time, they need a lot of 1x developers. And if you're looking for that sort of a persona and build and obviously upskill them along the time frame as they work with you, because they're going to learn more about the technology, the use case, the market, etc., then you would scale your talent in Istanbul, which is what a lot of these companies are doing. For me personally, Istanbul was the place where I had enough connections to access top deals, to build a name for myself, and then to expand. Our pilot was basically Istanbul with the first fund, and we had good success. We had 3 unicorns come out of Fund 1. And after that, we tried to target less competitive markets, like Bulgaria, Greece, Hungary, etc., to again be able to access top entrepreneurs. And as we built the fund, rebranded it, raised the second fund, now it's a 70 million euro vehicle, we started targeting more competitive markets in our region like Poland or Estonia. We even tried Israel back in the day. I did one investment in Israel just to realize that the deal was good and all. I like the founder, but in Israel, I don't have good access. It's way too competitive. And you need to have a stronger track record and a larger fund to be able to have enough time and capital to build your access advantage in those competitive markets.
Coming back to you, what kind of mindset do you have? Why did you take the career path you are currently on? Like, why do you do this job instead of like something else?
I think the initial reason was because I was too coward to become a founder, but I still want to work with early stage founders. And then obviously being an angel investor or an angel investor network owner or a venture capitalist was the best way to work with these early stage founders that I really want to do. Even with the current fund, with a 70 million euro fund, we write as low as 100K checks and as high as 2 million euro checks. Just because I wanna make sure that we do invest at pre-seed and idea stage and be there from the grounds up as the founders just start building the company. I think that's my passion. So I guess I would either do an early stage startup or the early stage investing are my 2 options right now.
And the mindset like you have right now, how has it evolved since the day you started actively investing? How did your mindset evolve during the time period? And you mentioned in your first fund, you guys like could identify 3 of your investments became unicorns. I think it's a tremendous success. How this success shaped your mindset throughout the years?
I think I always knew that founder is important, and it's the most important parameter within the whole list of parameters. But jumping on from Fund 1 to Fund 2, I realized that founder is the only thing that matters. It's not like, oh yeah, the founding team is the most important thing, but you should also look at the competitive market, the industry, blah, blah, blah. Not the case. I mean, you should only look at the founders almost. Like 99% of the decision is founders. That was one thing that I realized. Second was this whole thing around access advantage. This is not a picking game. This is an access game. When I first started, I thought that doing analysis paralysis and being able to pick well is what would bring success to a fund. But more and more, I realized that this is only an access game. And if you had access to all the different opportunities around you, then it's easy to pick the good ones anyways. But there's all this access asymmetry and information asymmetry that is there on early stages. That goes down slowly. Obviously, if you're doing pre-IPO investments, everyone knows about every single company, and you can even outbid and get access to good companies without having the brand to justify it. But I think on a spectrum, if you have on the left pre-seed idea stage deals, and on the far right, you have companies that have already IPO'd, far right is a picking game. Everyone has access to the same stocks. Everyone has access to the same information. You pick well, hopefully, and beat the market. But we're playing a game on the far left, which is a pure access game. And it shifts your perspective in a way that what you prioritize for, both from a personal branding perspective, but also you putting your efforts as deal access, hoping that picking is much easier to do anyways.
Really impressive. And I have a question on the amount of entrepreneurs like you interact. How many new entrepreneurs slide decks do you think you see on average per year?
On a monthly basis, we meet with 100 new companies. To meet with 100 new companies, you probably scrape through 300 or so. Mm-hmm. So this whole stack that I've told you about, both data-driven but also personal connections, network, blah, 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 it's probably yielding about 300 or so deals on a monthly basis. And then our team meets with 100 of them. We have a rule that the second meeting onwards should be with a GP. We don't want an entrepreneur to meet 3-4 times with an analyst. There has to be a decision maker second meeting onwards. And I think our funnel on a monthly basis is us seeing or screening 300 deals, meeting with 100 of them first meeting, probably having 20 to 30 second meetings where there's a GP present.
Wow, that's a lot. It's on top of other administrative stuff. Like, and you may be simultaneously working for like an IPO, right? At the same time, like you cannot push brakes basically. What industries or technology trends are you most excited about like right now? I think your investment focus changes from time to time, as you indicated earlier. What industries or technology trends are you most excited about right now? And where do you see the biggest opportunities for investments as of now?
We did a lot of dev tool investments over the past 2 years. So I believe that there's a huge push towards, there are multiple pushes. If you look into broader dev tool category, there's this whole trend of number of developers ever increasing, and I think that's just going to continue. Second thing is obviously tools to enable these developers ever growing. I think it's just going to become even more niche tools to automate people's tasks because of this whole developer shortage that's been there for decades now. There's both unbundling and bundling trends happening spontaneously around dev tools, and it changes. You bundle for 5 years, you unbundle for the next 5 years. But what it fuels is open source. While tools are bundling, you have more open source versions of that coming out for ease of bundling. While they're unbundling, you have even other open source versions coming out because people want to use these more composable architecture open source tools as they unbundle a larger suite. So those tailwinds that are either more recent, like open source, I think is more recent, like 10 years, I would say, or the shortage of developers, which is more like a 50-year thing. They're all fueling dev tools. That's why half of our portfolio is dev tools. That wasn't the case in Fund 1, but I think over the past 5 years or so, dev tools has been the biggest category for us. Second would obviously be AI ML. The AI ML hype has been there for the past 10 years. I think it guide so there's a technology inflection that can start a trend. And then when consumer adoption inflection sits on top of it, which is what's happening with Gen AI right now, it becomes almost like a double trend sitting on top of each other. So we've also invested, the second category that we've invested has been AI ML and the tool stack around AI ML. Within the AI ML umbrella, we both do application layer investments and infrastructure layer investments. Application layer investments are more vertically focused on different industries where AI can yield tremendous results, and you can have these more high average contract value products in B2B especially. And then infrastructure investments have been more around the democratization of AI tools for us, because we believe that AI needs to penetrate every single use case almost globally, even this Zoom call.
Yeah, and this is very exciting. And is it okay to say, with the developments in this Gen AI space, AI ML space, I think in the past, like for scaling purposes, like B2C was probably like a stronger focus for VCs. And right now, things are actually shifting in favor of B2B business models, right? Because basically Gen AI and AI ML can help you to scale easier in the B2B space. Am I correct, like on that?
Yeah, you are correct. I think whenever there's a tech inflection that's happening, you see more B2C applications pop up rapidly, which then give leeway to more B2B applications that actually create more value eventually. And that is the case happening with AI. Also Gen AI for sure. I mean, if you look at the top revenue Gen AI applications, I would say almost all of them would be consumer these days. But I think that's slowly changing. And hopefully a year from now, that wouldn't be the case.
Thanks. Can you share with us a story about a particularly memorable investment you have been involved with and what made it stand out?
I would say billion to one because it encompasses a lot of different parts of what we've discussed. So the third bucket, third category of our investments, third largest category have been health tech. And that has been almost stable amount of investments in Fund 1 and Fund 2. So dev tools, we didn't do many in Fund 1, Fund 2, it skyrocketed. AI, we didn't do much in Fund 1, Fund 2, the obviously current hype around AI for the past 4 years, we did a lot in AI ML. Health tech has been our third most category for 2 funds in a row now. Billion to one, this AI-based molecular counting technology that we've invested. I did the pre-seed back in 2017. It's a unicorn now. It was a technology of counting molecules through AI that was looking for its application. And the initial application that the founder wanted was a more of a lower hanging fruit, was on prenatal testing. And although prenatal testing has more of a capped market where there has been a couple M&As, a couple IPOs, it's a market that's already largely penetrated. Our technology was democratizing the use of it, making it cheaper almost by 1/4, which would enable a lot of people to use the technology, not only in the US, but also in more in different regions around the world where you have a lot of chromosomal diseases, especially in Southeast Asia, India, so on. They did commercialize with prenatal testing. Obviously, the company became very successful, reached very good numbers of annual recurring revenues, but there's a certain cap that's there. And the second application of the technology has been in the oncology space with liquid biopsy, which I think has a 10x larger market. Plus, it's much more up and coming. It's not as penetrated as prenatal testing. So the reason why I gave this company as an example is, first of all, I think the technology that they've developed was a bit too early to the market, where they looked for different applications of that proprietary technology that they've developed. And then while looking for applications, they wanted to go for lower hanging fruits to prove commercialization if they went for liquid biopsy or different oncology use cases. Before then, commercialization would have been 5-7 years away, which I don't think is the right model. Just from an entrepreneurial standpoint, you need shorter feedback loops, which is the reason why they did prenatal testing, grew the network, understood all the stakeholders in the health space, and now, I mean, not now, but like a year ago, they moved on to oncology.
So that's fascinating. And what's the name of the company again?
Billion to one.
Billion to one. Okay. Finally, where do you see the future of venture capital and entrepreneurship headed? And how do you think 500 will continue to adapt and evolve in this ever-changing landscape?
I like the venture capital model just because it keeps the incentives alive. If you're comparing debt financing to equity financing, what's important about equity financing in general is that incentives are aligned on the table, whereas for a debt provider, they just want their debt to be repaid. If you realize the upside potential, it's your money, great. If you haven't, then you failed. But all in all, the debt provider wants to make sure that they're going to get the debt money back. What I like about venture capital is that it's not just that it's looking for a segment of the market where debt providers are not able to provide that. It's more so that it's keeping incentives aligned, which then enables these more hockey stick type scenarios. And obviously it fuels entrepreneurship, creates jobs, etc. So I don't think the venture capital model is going away at all. I don't think it's going to get, there's all these different models of equity crowdfunding, etc. Or even some countries trying to form out different private markets that would only enable retail investors to invest into venture capital-like opportunities. I don't think those initiatives would kill venture capital just because of the whole information asymmetry and the axis asymmetry that the industry has and will continue to have on pre-seed and seed. I don't know what would happen afterwards. And then in terms of entrepreneurial skill set, I think this industrialization that we've been through over the past couple hundred years globally has slowed down, and there are more entrepreneurs, and I think there's going to be more entrepreneurs. 5,000 years ago, 10,000 years ago, we were all entrepreneurs basically, and I think it's almost like a full circle. And as like Naval points out, the initial form of leverage was actually leveraging humans, so having a good workforce. Then came capital, then came technology. Now I think the fourth one is going to be AI, and which is also alluding to what Sam Altman says, that now one person can build $1 billion company alone just leveraging AI, is what he said yesterday. I think we're going more and more towards that direction. And that more fragmented and granular nature of work, or the definition of work, is something that excites me. Imagine a shoemaker a couple hundred years ago. What a shoemaker would do would be doing the basement of the shoe, the leather parts, the lice, and then opening the shop every morning, seeing the customer, looking at their feet, seeing them out there in town where they're actually wearing the shoe that they've made. There's all this purpose of having a shoe shop, making your manufacturing your own shoe, and then selling to customers, and then seeing happy or unhappy customers. You see the full circle. Industrialization and verticalization of work killed that, taking the joy out of work. So I see this blossom of entrepreneurialism bringing back purpose to work, so that you don't just wait for the weekend, but you actually enjoy the work days.
Enis, thank you very much for this eye-opening discussion. It was really a pleasure to have you on the Lehigh Low Ego High Impact Mindset podcast. Do you have any final words for the aspiring entrepreneurs, like one or two sentence recommendations for the aspiring entrepreneurs?
First of all, thanks for having me. I think anyone can become an entrepreneur. Not everyone can become a venture-backed entrepreneur. Not everyone can become a startup entrepreneur, but everyone can become an entrepreneur. And that's what's important. One thing that gives me comfort, and my good friend Sean, who built Parachute and then exited in Turkey, he had this confidence in him where he said that no matter where you drop him in the world, give him 6 months, he's going to be well off. And knowing that is his confidence in being able to build different companies, big or small. I think everyone has that in them. It doesn't have to be anything huge, but you can easily build a company and make more money than you would have otherwise.
Enis, thank you very much for being with us today.
Thank you.
Thank you for diving deep with us on another episode of Lehigh Low Ego High Impact Mindset. Join us every week as we discover the stories, strategies, and insights that will empower you to grow personally and professionally. Stay inspired and catch you in the next one.